Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpha Research and Analysis, and this is Daily Analytical Report, where we will look for decent trading setups, for decent trading occasions, and we start as always with the macro calendar, because few seconds ago, well, we always have to start with the macro calendar, but this time, few seconds ago, we had important data for the Eurozone, for the Euro, so CPIs, inflation. Almost always in Europe, inflation and all the data actually come in line with expectations. So here also we didn't have any surprises. I think for the bigger movements, we'll have to wait till the speech from Mario Draghi, ECB president, which will be in 3 hours. Because CPIs failed to bring some volatility to the market. Euro is, I don't think that euro is stronger. Euro is a bit stronger, but it's not like statistically significant. So we cannot. I don't see an influence of this data. After that, we'll have Mario Draghi, but we'll also have other ECB members speaking, and it's not only them. We'll have FOMC members and members of National Bank of Switzerland and Bank of Canada. So we can call it a day of central banks with speeches from the most prominent figures. There about the single data, I think we are done for today. We shouldn't get any important numbers. For that, we will have to wait till Thursday for important numbers to Australian market, and that's it. So let me show you the charts. On the charts, we start with euro dollar. As you can see, this reaction. I don't think it's H4. I don't think it's significant like H1 here. What happened on euro dollar? Yesterday we had a huge drop after our seminar, after daily analytical report. But we told you that we are expecting this. So there was a downtrend. The flag eventually created a flag, not a reversal. That was just a correction. On 14th of May, we broke the horizontal support, this gray one on 1.9040, along with the lower line of the flag. The price went lower. They stopped a little bit on this neckline here, but eventually they broke the neckline. The drop was very, very strong and stopped on those lows from middle of May. A few words of explanation, because on our daily, on my seminar in India, I opened a long position here, but I closed this long position and with a break-even point, and I reopened short position here, and I closed my short position here. So that was a very good trade on euro. On euro dollar, well, that's the beauty of swing trading, and that's the beauty of trading only setups, not your ideas. Like, I don't have a clear view on euro. I don't care if the euro will go up or down. I just trade trading setups, and first I had bullish setup, then I had a bearish setup. So that's what I traded. Currently the sentiment is definitely negative. We should see the price falling deeper. I think that the reasonable target is here, support from August, support from October, support from October, yes, here, support from October, along the way, November. That's a good idea. That's a good take profit order here. We can also try to estimate the potential target of this drop. What are the odds? Okay, on potential horizontal support we have 38.2. So in my opinion the gravity of this point will act and we will have a stronger drop towards this point. Another instrument from yesterday is gold. Gold failed to hold this 1,305 dollars for ounce, so gold made yearly lows, which is super significant, right? And they stopped on the uptrend line. Now they are performing a bounce. It's a good place to buy, but depending from the style of the bounce. So far it's not convincing. I'm not convinced to buy here. So I'm staying away, even if in the long term I'm quite positive about gold. But so far we don't have signs of that. Well, gold is on yearly lows. That says it all. Even if we are a long-term uptrend, gold is on a yearly high, yearly lows. It's not encouraging to buy whatsoever. Euro to Canadian dollar. I was thinking about the long position here because of this hammer on the long-term uptrend line. The price went higher. Yesterday at some point we had a hammer as well here. Well, on H4 we had a hammer. So I thought it's like a double bottom formation. I bought here. The position is still open, but the stop loss is very close. Stop loss is somewhere here on my trading account. It's different account that I'm showing you now. So most probably it will end up on loss. It looked promising, it failed. Well, what can I do with that? Nothing. Drop, flag, drop. Most probably those supports will be eventually broken, and that should trigger us a strong reversal, and I'm not gonna hold this position. Never, never, never. I'm just gonna move to another instrument. Actually, I will show you which instrument I chose. Because there is a correlation. Well, I was long on euro to Canadian dollar. It seems like it won't work out. So I'm short on British pound to Canadian dollar. You will see the setup, I will explain you. British pound to Japanese yen, bounce from the horizontal resistance here is close to the horizontal, so, well, not close, but probably will aim horizontal support along with those uptrend lines. Breakout of those supports will trigger ultimate sell signal with good risk to reward ratio without hesitation. If the price will get there, I think that the only good decision here will be to sell, in my opinion. Like, even if it won't work out, there should be no regrets for trying to sell here after the breakout. American dollar to Canadian dollar situation was beautiful here, here, here. It got a bit ugly here. Huge upswing. They stopped on a horizontal resistance, and now really I don't know what the price is doing. I have no idea. But I don't need to have an idea. That's a false perception that if I'm a trader I need to know the situation on every instrument. No, I don't. What trader has to do is to pick the best setups from the market and trade them. This is not the best setup on the market, so I'm not gonna trade them. I'm not gonna trade it actually to decrease the amount of information that is coming to my screen. I'm gonna remove this instrument. WTI oil, as expected, created a fifth trend continuation pattern, went higher. Oh, the price is really high. This up wave is stretched, so maybe it will be time for a correction, for a bigger correction. We'll see. I don't have view on oil as for now. British pound, Australian dollar. So they defended this horizontal support twice. As you can see here, horizontal and long-term uptrend line. If they will fail to hold the price above and maybe draw an inverse head and shoulder formation, there will be a strong chance for a further drop. So that's a good idea for a sell stop order. I don't like pending orders, but in the same time I'm aware of the fact that it would have it wouldn't have a sell stop order here. Now 3 instruments from the trading sniper video. First one is New Zealand dollar to Japanese yen, which this pair is above the horizontal support. Horizontal support, well, it was a resistance first, became significant in September 2016 after the breakout. It could defend it here in November, in the middle of November and April. Then it could defend it in November, but next year, and this year in March, and a bit in the beginning of May. But now this support is under the heavy pressure. Buyers are doing everything to hold above. I think that the price closing a day below the green area, that will be a strong sell signal. As for now, we don't have it, so we have to wait. But that will be like super important. Euro to Australian dollar. Here situation is very interesting because buyers had it all to perform an upswing, but they are not doing that. So what did they have? Contact with the long-term uptrend line and a pin bar. Contact with the horizontal support and a pin bar. A flag formation, which is a trend continuation pattern. So like upswing, flag, should be an upswing. Also potentially an inverse head and shoulder formation, like left shoulder, head and a right shoulder, left shoulder, head and a right shoulder. So what we need here is a breakout of the upper line of the flag. A breakout of the upper line of the flag will trigger an important buy signal. If the price will fail to break the upper line of the flag, the next target will be the green area, and a price closing below the green area will be a super important sell signal. But watch for this horizontal support here. So to be precise, I would go with something like that. Bounce, maybe here, something like that. And this is the setup that kind of hedges my long position on EuroCAD. So if I'm long on EuroCAD and short on British pound to Canadian dollar, it means I'm long on euro to British pound. So we will see how it works out for me, this correlation. But here British pound to Canadian dollar is in a negative territory after failing to hold above the long-term uptrend line. Then the price broke this uptrend line. Then the price used the horizontal support here for a bounce and 38.2, but failed, went lower, then tested that as a resistance. Test was positive for sellers. As you can see, broken support becomes resistance, the price goes down. We do have a flag and breakout of the lower line of the flag, and the price should continue to go down. First potential target can be 50% Fibonacci, but I think that 61.8 looks better because of this, instead of this and here. So like stop loss 150 pips, potential take profit 500 pips. This is a desirable risk to reward ratio. I like it. So this is my view on British pound to Canadian dollar. Next instrument from yesterday is Australian dollar to Japanese yen, where we do have a pennant, or actually it's a symmetric triangle because it's a long-term pattern. So we are waiting for either the breakout of the lower line of or the upper line of this formation. And Australian dollar to American dollar, waiting for this inverse head and shoulder formation, which may actually happen because the right shoulder has two long tails here, so it may be the start of finishing the right shoulder. Inverse head and shoulder formation here would mean the false breakout below the horizontal support, so maybe a very positive sign. And yesterday we stopped on those instruments, so today we can continue with analysis of the rest of the instruments. So we have euro to Swiss franc, but I would like to show this euro to British pound. Because, as you know, I have a long position here on euro to Canadian dollar, and I have a short position here on British pound to Canadian dollar, so it means I have a long position on euro to British pound from the correlation. So let me see if both positions actually, like if this can bring me a profit and this can bring me a profit. If that would be the case, we would need to have like extremely bullish trend on euro to British pound. Do we have extremely bullish trend? Well, unfortunately not. Obviously, I can be biased right now. Well, no, I'm not, because luckily I have a trader's mind, so I'm avoiding all the bias. What we are having here. Situation is not clear, unfortunately. I would love to give you some insights from that, but what we have here is in the long term, that's a wedge, so it should result with an upswing here and a trend continuation. In the short term, what do we have in the midterm? What do we have here, like for example, is a false breakout below this horizontal support. And then the price creates inverse head and shoulder formation, breaks the neckline, and there is a test of the neckline, and we should see an upswing. But in this, and all those are bullish factors. But in the same time, we have like a triple top formation and a kind of a, let's say, a flag. So we have a drop, correction, drop, flag, and we can experience a breakout of the lower line of the flag. So from my point of view, there is no chance to estimate the direction here. For me, it's like 50-50. I can see now that euro to Canadian dollar is accelerating, is gaining some traction to the downside, as you can see here. So maybe it won't be my concern anytime soon, because I will have an activation of the stop loss order quite soon. I can see that price is like how many pips? 8 pips from my stop loss order, so it won't be my concern soon. Anyway, that's the euro to British pound. Yes, and we can see a heavy drop here. Euro to Swiss franc template. Let's see if we have an interesting pattern here. Yes, euro is on a back foot right now after this data, even before Mario Draghi started talking. I don't like trading on euro to Swiss franc. I don't think that this pair has interesting technical setups. This pair for me is not technical. We'll see. Maybe we'll have a bounce here, maybe not. That's not a setup for me. Euro to Japanese yen. Let's see euro to Japanese yen, what's happening here on a weekly chart. Last few weeks as a uptrend. On a daily chart, that's an uptrend, definitely. Here is a support of the correction. Okay. We may say it's a kind of head and shoulder formation. Here are the Fibos. It can be head and shoulder formation, but it can also be the wedge. So here, breakout of the upper line of the wedge triggers a buy signal. Breakout of the lower line of the wedge triggers a sell signal. Fortunately, I don't see good horizontal levels here. Maybe this one looks reasonable, but it's too far from the price right now, so it's a bit meaningless. So again, it's not a setup for me. Let's go with another instrument, which is British pound to Swiss franc, which is reaching horizontal support as we speak. That's a good one. Also, the price is creating a flag or a wedge. Doesn't matter what it is. About the Fibos, let's see what the Fibo is telling us. 50% Fibo, and a bullish price action here will be an invitation to go long, but before going long, I would prefer to see the price coming above also this horizontal resistance here. Maybe I will use another color. Yes, like that. So price climbing above the yellow area will be a buy signal for me, and I'm gonna leave this instrument here. As you can see, EuroCAD is going down heavily, but at the same time, British pound to Canadian dollar also is on daily lows, for example. But the acceleration is not so fast here, but maybe stop loss will let it go. We'll see. Now cable. See, we didn't analyze cable yesterday, but no worries, we're gonna do this today. Cable is on a back foot, a broken up trend line, broken horizontal support. And this setup that we have here, I don't like it. It's a sideways trend. It's not a good place to be. We are breaking on the downside, but the scale of this drop is so big that I would be afraid to go short after such a strong drop. American dollar to Swiss franc. That's pretty impressive upswing, you have to admit, in the past few days. As you know, I don't like entering market after movements like that, so I'm just gonna skip it. American dollar to Japanese yen is making progress. The price ended the correction here, like a sideways trend maybe. Use the uptrend line. Now they tested this horizontal resistance as a support, and it looks quite promising, right? Ascending triangle, broken resistance tested as a support. That may be like a small flag. According to the price action rules, everything is good here and should result with an upswing. Another instrument, Australian dollar to Canadian dollar. First, as always, you need to start with a daily chart. We are on an important horizontal support. The price on a daily chart is so far creating a hammer, and it can be an inverse head and shoulder formation. So definitely that's unfortunately a counter trend trade. But in terms of the risk to reward ratio, that's what I call like a risk worth taking. On a weekly chart, also on a weekly chart, the situation is super interesting, because on a weekly chart, what would you get if we would finish this week on local highs? We'd get three candles with long tails, and this kind of a setup on a weekly chart looks promising. So I'm definitely gonna keep my eye on this, because Australian dollar to Canadian dollar looks very, very promising. Also, let's check the potential targets for this, like breakout of the neckline. Potential target 23.6, but it almost never end on 23.6 low. Usually like those drops are deeper, those movements are deeper, like 38.2, maybe even like between here, support, resistance. Seems like a good place. That seems like a good place for a target. So yes, I'm definitely keeping this chart. I'm keeping my eye on this chart because it looks super nice. Not now, but for the future. Now Australian dollar to Swiss franc. Australian dollar to Swiss franc. What we are having here is a boring sideways trend. Only the breakout of that lower line can bring us some attractions here, like a stronger drop, but it's not a good setup for now, so I'm not going to be bothered here. Canadian dollar to Swiss franc, also not very interesting, because that's a sideways trend and we are after a strong directional movement. That's not the place to be for me. Canadian dollar to Japanese yen, also kind of a sideways trend here. No, not very interesting. Euro to New Zealand dollar. I remember that in the past I had some good trades on Euro to New Zealand dollar. This pair was quite good in terms of the profits that it was giving me, because it was very technical, right? Upswing, correction, upswing, head and shoulder formation, maybe not too big, but still. And but unfortunately, most recently the situation broke here, and it's not very attractive for me, so also I will skip this. A few more instruments, maybe one, and we will obviously continue the analysis of the instruments tomorrow. What do we have here? Also, like, that's the worst place to trade, actually. Look, New Zealand dollar to Canadian dollar, for example. We are in the middle of the symmetric triangle pattern. Most probably the price will go here and bounce, or won't go here and will bounce, because the drop is so strong for now that maybe the correction will happen. So it's all maybe, because it's a sideways trend, and that's how the sideways trends works, that nothing is certain in sideways trends. So guys, thank you very much for attending this webinar. As you can see, euro dollar is dropping the support, so it opens us away to those lows, 38.2. So what would we have here is a trade like 50% stop loss, 50 pips stop loss, 100 pips take profit. That's a good risk to reward ratio. Again, gold fails to defend the uptrend line, but at the same time we can go like lower here, create a double bottom formation and bounce higher, and if that will happen here, that will be a super strong buy signal, because it will happen on the long-term trend line. EuroCAD make some heavy drops, but for now they stopped. British pound to Japanese yen is this line threatening this area. Oil here, euro to Australian dollar, very close to the major sell signal. British pound to Canadian dollar, as you can see, they are failing to go lower, so it's not so bright. Support, support, support. Maybe this line is the reason why the price cannot go lower. Actually, let's make it accurate like that. Australian dollar to Japanese yen, waiting, waiting, waiting. Here, waiting. And I think that Australian dollar to Canadian dollar is one of the best setups for me at the moment. There is not yet buy signal, but buy signal, very strong one, should be created once the price will break the blue line. So that's the situation worth looking at. Thank you very much again. Now a short break, and after that a webinar about MetaTrader 4. I will tell you how to use this platform for trading. So thanks very much, and see you in half an hour. In the meantime, I think it would be nice if you would visit our Twitter account and our website alpri.news. Thanks very much and goodbye.